Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index slipped back below the 97 level on Monday, giving up last week's rebound as G10 currencies strengthened and concerns resurfaced about a potential global shift away from dollar-denominated assets. Traders remain cautious ahead of key US data this week, including the jobs report and CPI. Meanwhile, the Japanese yen gained after Prime Minister Sanae Takaichi's decisive election victory fueled expectations of possible FX intervention tied to looser fiscal policy. WTI crude rose above $64.3 on Monday as markets continued reassessing geopolitical risk premiums. That rising geopolitical premium is now offsetting supply concerns. OPEC's cumulative production increases, along with strong output from the US, Canada, and Brazil, have reinforced the narrative of ample supply. Adding uncertainty, India's crude import outlook remains unclear, as trade discussions with Washington reportedly include conditions tied to reducing purchases from Russia. Gold surged more than 2% on Monday to around $5,070, marking its highest level in over a week. The rally was driven by softer real yields, a weaker US dollar, and renewed safe haven demand ahead of key US economic releases. The New York Fed's one-year inflation expectations eased to 3.1% in January, helping cap Treasury yields and boost gold's appeal. Recent Federal Reserve signals, including Mary Daly's openness to one or two rate cuts, have strengthened expectations for policy easing. Yen began the week on the defensive, pulling back toward the 155.5 region where it is currently facing resistance. The move follows heightened speculation of possible Japanese FX intervention after Prime Minister Sanae Takaichi's landslide election victory. The ruling Liberal Democratic Party secured a commanding majority in the lower house, giving the government greater flexibility for fiscal stimulus. However, intervention risks remain in focus. Euro maintained strong underlying demand, breaking above the 1.19 mark during Monday's North American session. The pair's steady advance comes as the dollar remains on the defensive ahead of US non-farm payrolls and CPI data. Easing concerns over potential Middle East escalation following recent US-Iran talks have also supported risk sentiment. The broader fundamental backdrop continues to favor buyers, keeping upside momentum intact.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.